Hello, my name is Troy White. I'm with Hoodoo Financial. I'm a financial educator, portfolio manager, and financial planner. And what we're talking about today is stock market, and we're just going to cover the very basics in terms of investment strategies. So I'm just going to list a few, say a few words about them, and there are more strategies than I can list today. And so, if you have some you'd like to hear more about, leave it in the comments, and I'll address those. So, starting off, the buy and hold strategy. So, it means what it says. You buy it, you hold it. It's not for short term. It is a long term investing strategy. It's meant for long term returns, and you can overcome short-term volatility by buying and holding it. You're holding it for the long term, and so the ups and downs that occur daily, monthly, weekly, they don't affect you, especially when you use the buy and hold uh, philosophy, strategy, technique in conjunction with some of these other strategies. All right, some of these other strategies like value investing. Value investing is you're selecting undervalued stocks. Um, and the reason is because market irrationality produces the circumstance where basically you're presented with discounted price opportunities. And what I mean by market irrationality, um, people do irrational things when it comes to the stock market. So, irrational exuberance is what you might have heard it referred to as. But basically, um, uh, when there's more buyers than sellers, the price goes up. When there's more sellers than buyers, the price goes down. So when people are on one end of that, and they are not buying the stock according to the true value of that company, then that's when you find value. So basically, in a nutshell, make it simple and plain. That means this stock is available. It's on sale right now. It's the what it's being sold at because of the market is selling it at that price. What's being sold at doesn't reflect the true value of this company, and so you're going to use things like price to earnings ratio, the earnings per share to evaluate this the price of this stock and make your decision. So that's value investing. You want to buy it now, it's at a discount. Then there's growth investing. Growth investing is you buy a company that's small now because you think it's going to grow. Simple. Um, Stocks with a strong upside potential is what you're looking for. Um, you think that the future earnings will justify buying it right now because right now it's a small company, but the future they're gonna do big things. So literally, it's when you see this company as the next big thing, that's you buy it now, because you expect that growth to occur. And then let's touch on momentum investing. I call this like bandwagon investing. Um, Stocks that are experiencing an upward trend is where the novice investors, their money flocks to. The momentum carries the investors that direction. So the concept of winners keep winning and losers keep losing, and out in reality it doesn't stay that way, but you could get a good ride by following the momentum of the market. You see an upward trend, attack. But it requires you to have an exit strategy. Often the momentum will carry it up and carry it down. So you got to know when to jump on, when to jump off. And then let's talk about dollar cost averaging. Dollar cost averaging is a strategy that is one that fights against volatility. Dollar cost averaging is making regular investments over time at the same amount. And I even say it's on the same day. So, for instance, you select the 5th of every month to make your investments. So, and you should automate this, and that's how I encourage all my clients to do. So, on the 5th of every month, you can pick any day, but let's call it the 5th. So, on the 5th, you send, let's just call it $200 to your investment account, and it's intended to purchase whatever stock you want or portfolio of stocks. And you're going to buy $200 worth on the 5th every single month. I don't care if the price is up or if it's down. Because what that does is gives you a better average cost per dollar that you spend. So, for instance, if the stock is selling for $10 a share this month and you invested $200, you're going to get 20 shares. If the stock is selling for $10 this month, or excuse me, I just said 10, $5 next month, then most people react negatively to that. But a person who's dollar cost averaging will think very positively of that, because they're going to buy more shares on that 5th with the same $200 that they bought. And so let's say it goes up the following month. Well, your shares that you bought at a discount just helped you out a great deal. And if you do this consistently over time, you are going to beat out that volatility, the ups and downs of a particular stock. And so that's dollar cost averaging. Then there's day trading. Day trading is all about speculation. It's when your goal is to buy and sell a stock the same day. And so, although some day traders, they have strategy that to buy and hold during the week or during the month, but fundamentally, it's short term. It's the shortest of term of investing. People are just speculating, and they may have some technique of some sort, but fundamentally, you're hoping that you're buying the stock today for $10. I hope it goes to $12. And you sell it, you make $2 per share. If you did that with thousands of dollars every day, then you can make some good money. But just like when you go to the casino, you win some, you lose some, and you usually lose more than you win. So that's how day trading really is. Options investing. Options is a sort of a derivative. An option is, think about the word option. You are buying or selling options, option to do something. So those are puts and calls. So when you purchase a right. When you sell an obligation. So you have the obligation to buy a stock or sell a stock at a certain price. You have the right to buy a stock or sell a stock at a certain price. So depending on whether it's a call or a put. And there are multiple strategies with either part, the put or the call. And so that includes cover calls, married puts, call spreads, collars, straddles. But these things are basically to hedge against the activities of the market. So you hold a position, you want to hedge against that. You want to limit the amount you can lose, right? Really what that means. And also, if you own the stock already, writing covered calls gives you the ability to make additional income on a stock that you already hold. And so if you want to learn more about option strategies, just start looking it up. I don't talk much about options on this channel. Maybe I'll do that. Maybe I'll get into discussing options next year. It's not particularly of interest to me. Also, I'll end with legacy investing. Another strategy. Now, some of these strategies involve other strategies, and so definitely legacy investing does. Legacy investing is just investing in such a way that your you are really investing so that you can pass down your assets to your heirs. And you might think of it in terms of investing for your grandkids and their kids. And so that is just investing in assets that definitely to buy and hold, right? But there are multiple strategies within this overall um, method of investing, legacy investing. And you want to basically build a machine that's printing money. Legacy investing definitely includes the stock market, but um, you probably will involve yourself in real estate and on some form of entrepreneurship as well. And the way you invest in the stock market is to support your entrepreneurial activities, your real estate endeavors, as well as leaving that legacy that is going to of assets that are going to be passed on to your kids. And I'm going to cut it there. Next time we'll talk about some real estate strategies. Um, Remember to like, share, subscribe, hit the notification bell, and if you need any specific information or you need a consult, I'll put the link to schedule a consultation in the description or in the comments, depending on where you see this at. So, thanks for listening. I'll talk to you soon. Holler.